Hey guys, Andy Demi here. Welcome to another video episode. Hope you're well. I'm done for the day. Calling it a day early, ready for the weekend. So hope you're having a good day and have had a good week in the market. Now today I got a question a couple of days ago and I want to answer that question. And the question was basically about return. So a few videos ago I spoke about account sizes and what kind of money you might need, and I spoke about, for example, requiring say like a £50,000 account in order to make a salary that you could live off in the UK. And the example that I was talking about there was if somebody was to return 10% a month, then they'd make about £5,000 a month, which is a good return in terms of it's a good salary to take in. Okay. Now the question was really, what really should somebody be aiming for? Is 10% realistic? Because if, for example, you're able to make 1% and you have £50,000 to invest, then you're only bringing home £500 a month, which is again not enough for you to live off. And equally, some might say, well, also, in terms of account sizes, a lot of people may not even have £50,000 to invest, in which case you'll probably be splitting your profits up with an investor, okay? And there's plenty of investors out there, as I mentioned previously. Now, let's address the question, what is realistic? Well, it's a really, really basic, simple formula, okay? And this is it. You, as a good trader, as an average to good trader, should be able to make the same percentage return as what you are risking every month. So for example, if I have 10% risk on £50,000, that means on the month I have £5,000 of risk capital. So in other words, I'm allowed to lose £5,000 in a month. And so with that capital, I can go and risk it in the market looking to make a return. What should that return be? Well, if you're a good trader, your average return should be the equivalent of what you risk, and in this case, therefore £5,000. If, however, you only want to risk 1% on any given month, you're only risking £500, and therefore your expectancy as a decent trader is to make £500. Now, you could do better. So as you become more skilled, you may risk 1% and maybe you will make 2%. So you make 1,000 risking 500. But that's improving yourself as a trader. If you're just doing the bog standard average, then you should be able to make 1-to-1. So really it comes down to two things. How much are you willing to risk on your account, and how skilled are you as a trader? If you're starting out, your goal should be 1-to-1. So really it comes down to risk appetite. If you're somebody who wants to risk more, obviously you can make more. And sometimes when you see people doubling accounts, you might think they're very skilled, but really what they're generally doing is they're risking 100% of their capital in order to make 100% return. And in other words, if the trade goes wrong, they blow up their account. And that's why what you don't normally see with these guys is they've probably blown 3 or 4 accounts and then they show you the one account that's basically doubled. If you're trading serious money and you want to do this as a profession and as a living, you can't trade that way, and you have to control risk. And really, how much you should be risking is another question that maybe I'll even go into a bit more detail on another video, but just as a basic thing, it's all about knowing your numbers and what you can handle psychologically. So when you understand that, for example, you are somebody who won't lose, let's say, more than 3 months in a row, well, you could do the maths and recognize that you don't have to risk 1% a month, okay? So you can do 10% a month, even 20% a month. But the things that you need to worry about is the psychological impact it can have on you, and that is a completely another story, and I will cover that in another video. Okay, because it's not just the pure mathematics, it's also how it will affect you psychologically when you have a big losing month, and that should be factored in when you decide how much you should be risking. In my opinion, 10% is about the maximum that I would be content with losing in any given month, and therefore I'd be expecting to make at least 10% a month if that's what I'm going for. It shouldn't really be any higher than that, in my opinion. Okay guys, hope that helps. Good trading, have a fantastic weekend, and I'll see you next week on Monday with another video. Take care, bye bye for now.